What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart post-Bitcoin ETF launches that took place yesterday in the United States stock market. Has Bitcoin run out of juice after hitting its 618 Fibonacci retracement level? Was that the climatic event? Was that the peak? Well, I'm treating it like it is. Yesterday, I posted over there on Twitter. I'm done. I've finished selling all the Bitcoin accumulated at the lows. The 0.618 retrace was hit this morning. That's it for me. Wild year-long ride. Good luck to Bitcoin. I still have the 35% from 2018 to 2019, which is about 8% of my overall portfolio. Time for the real fun. As you guys know, I've been distributing all throughout here, and yesterday, post-ETF launch, I finished. I'm done. All of my FTX collapse Bitcoin has been sold. It was a long, rough ride to get back there to those retracement levels, but we have done it. But what do I mean about time for the real fun? Well, that's where we're going to start talking about Bitcoin dominance and how this thing is looking very, very wobbly to start heading down, and why that is a wonderful thing for the altcoin market. So we're really going to divide this video kind of into two parts. One being like the fun is done for Bitcoin and the attention is going to shift, but we need to actually look at Bitcoin and understand why a peak could be coming in here for Bitcoin right now. Now, most of you who watch the channel and have gone through the depths of despair in the cryptocurrency market in 2022 and then the wall of worry climb back up here in 2023 already knew I would do this as we got back to this location and back into the retracement levels. Yesterday, we nailed it, and we did it right during the ETF launches. Now, that was the Bitcoin market cap, but you can also see over here, the actual price chart did as well, as the price got to $49,000, exceeding the 618 Fibonacci retracement, again, making it to the level that I was looking for. It was a tough road to get there, but we finally did. To see examples of how that retracement level can cause problems for Bitcoin, you can just go back into the past, go back and live in 2019. Notice one wick above the 618 retracement level. That was it. Go back to 2014, 15, and 16. Hits the 618 retracement level. Boom, big fallback. Now, while both of those circumstances did ultimately lead to new bull runs happening for Bitcoin, I am more skeptical that Bitcoin is going to be able to do that, considering Bitcoin was created during the depths of the great financial crisis, and they launched the ETF products only 3% away from the 4.236 on the Dow Jones Industrial Average. So this video is not going to spend a lot of time trying to say, hey, we're going to go here and then consolidate and bounce, or we're going to go here and then go up and then come down. That's not what we're going to focus on today. Today, we're going to focus on the altcoin market, but to just kind of wrap your head around it, because we're kind of living in the thick of the moment. A lot of times when we're living in the thick of the moment, the emotions get absolutely out of control. What was happening at the lows? Extreme fear, extreme depression. There's no coming back from this. What do we get up here? Extreme optimism, extreme euphoria, extreme hope that something huge is coming, as JP Morgan, Bitcoin's longtime best friend, and BlackRock, Bitcoin's longtime best friend, have financial products available for you to be able to purchase off of them. So not only do we get to the retracement level that we've been looking for, we also get an event to occur at the exact same time that we do. One of extreme hope, optimism, and euphoria. Irrational exuberance. You see all the price targets out there on Twitter yesterday. Kathy Wood going on to live television and saying the target is at a minimum $600,000 and in a bull case, which we think is way more likely, of $1.5 million. So that provides a lot of hope, a lot of excitement, and it gets people to buy, right? And where does it get them to buy? Right back at the retracement levels, which we know can be the problem. And it took Bitcoin working its way all the way up here for people to finally do that. Those who were here all of 2023 know how rough of a ride it has been to get up in here, but we have finally hit it. For that, my trade is complete. My plan for Bitcoin is complete. Now it's time to test the hypothesis that I've had of, will we have the altcoins go nuts in a time like this? And just because we get here does not necessarily mean straight line down. Logic tells me that JP Morgan wants to spend a good amount of time distributing that Bitcoin up here on you. So they could tease it for quite some time, especially since we see it over here in the stock market that these types of structures can really kind of go for a little while. So I would not be surprised to see us have to spend time up here. But again, that's not the point of figuring out what structures are going to look like in here. Does this mean that the juice has run out for Bitcoin and it's time for the altcoin market to have some fun? My thoughts are yes. It's been my thesis the whole time. This has been my thesis the whole time. Now it's time to put up or shut up for the altcoin market. And so where do we need to look? At the Bitcoin dominance. There's a reason I've been writing all these newsletters and doing all this research during 2023 on the altcoin market, on the performance of the altcoins during 2021, and what separated good performers from bad performers. As you know, this was a 4-part newsletter series focusing on developer data, percentage drawdowns, and circulating supply inflation. When taking into account all of those, a portfolio that had focused on those topics and those metrics outperformed the top 20 by market cap by a factor of 4 times better. Like I've mentioned, 8% of my portfolio is Bitcoin, 92% is in the altcoin market. And I'm going to show you why this is such a terrible chart that has major problems with it and does not paint the true picture. And that what we would actually see is that the Bitcoin dominance topped way back over here in June. But the illusion is there that Bitcoin is doing very, very well in relation to the altcoin market, but in reality, it's actually not. One thing, if you just kind of take off the blinders of seeing like all the hype that's gone on over there on Twitter, all the outrageous price targets and all the euphoria that has happened over the course of the last month, Bitcoin is actually up 5%. Wait a minute, I came here for life-changing gains in Bitcoin. That's right, the entire month leading up to the ETF, all the hype, all the anticipation for the month leading up to it, and now, one day after the launch, Bitcoin is up only 5%. Even if we go to peak from the entire month of anticipation for Bitcoin leading up to the ETF launch and launching and the most extreme euphoria there was, it's only up 12% over the entire month. But there becomes this sense of pain, this sense of capitulation on the altcoin market because we see this. We see all these posts happening out there. But remember the last 3 months? Solana, 1,000%. AVAX, 400%. Celestia, 600. Osmosis, 700. Optimism, 250. Internet Computer, 350. And really, we see it clear as day when we look over here at the dominance of others, which is everything in the cryptocurrency market, excluding the top 10. That this thing reversed in June of last year, 7 months ago. That everything excluding the top 10 has been outperforming Bitcoin. And you've likely seen me show you these charts before for Bitcoin's dominance versus Bitcoin plus Ethereum plus USDT plus USDC. That this is the safety trade, which is different from the safety trade of 2018 to 2019. That this thing topped back here in June of last year. The safety trade ended. And that's the major problem with the Bitcoin dominance chart, is understanding what it represents. That this is all altcoin outperformance happening in here. This is alt season number 1 from 2017. This is alt season number 2 from 2017 and 18. Then into the long bear market, Bitcoin grinds its way back up. But then the safety trade ends. Something we didn't have back in September of 2019 was a huge stablecoin market. Back then, back in July, August, and September, 1 to 2% of the entire market was the stablecoin market. However, the stablecoin market topped out at nearly 17% there in 2022, even now sitting at 7% right now. When the Bitcoin dominance is calculated, it's using that portion of the market to calculate Bitcoin's dominance. And it gives an illusion of Bitcoin doing better than it really is. And if you notice something about Bitcoiners, they are always pointing to Ethereum. They will no way will point to the collective rest of the market. They're always pointing to Ethereum. See, we're outdoing Ethereum. We're outdoing Ethereum. And there's a very good reason why, because if the picture is painted any differently without Ethereum, and if we look at the rest of the market has been beating Bitcoin since June. And I can show you that even here on the Bitcoin dominance chart. And we just have to understand, what does the Bitcoin dominance represent? It represents what Bitcoin's market cap is in relation to the rest of the market cap of the entire cryptocurrency market. Essentially, Bitcoin's market cap divided by the total market cap of the entire crypto market. And that's how we come out to 52% for Bitcoin dominance. We can really mimic this just by doing the calculation in here on our own, by taking the Bitcoin market cap and dividing it by the total market cap of the entire crypto market. Notice 52. We get the exact same thing. So what you'll see out there a lot is that Bitcoin dominance is going here, that it needs to go out here to this location. And that would make sense. It would even make sense to at least have to come back and hit that support level right there. If we're just going to be technical, if we're going to add fib levels in here to say, hey, we've got to go back and hit the fib level, or we got to hit the 702 fib level and get us back into here. All of that would make perfect sense if there wasn't a fundamental problem with how this is calculated, and that has to do with how big the stablecoin market was. The stablecoin market was non-existent during the safety trade. And what we can do is we can actually say, well, what is Bitcoin's dominance when we look at it from the market with it not including these stable coins? What does it look like for Bitcoin versus the actual real cryptos in here? And then we suddenly get a little bit of a different picture. Not entirely, but there is a different picture painted in here. First of all, without the stable coins, it has already hit resistance levels in here for the dominance. So Bitcoin's dominance of the entire cryptocurrency market, when we're not looking at these stable coins, but when we're just looking at things like XRP, Cardano, Ethereum, Solana, AVAX, all those guys. And if we remove just the stable coins, we've already hit a major resistance level. But to show you why Bitcoiners focus so much on pointing towards Ethereum and not towards the altcoin market, it's because what happens if we actually even remove Ethereum from here and we say, how is Bitcoin's dominance doing versus the entire market, excluding stablecoins and excluding Ethereum? And suddenly the picture is even more different. It shows that we actually did top back in June versus the remainder of the altcoin market. And it did already hit that level that everybody is pointing to, which you can see right there. There's a reason they scream Ethereum, 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 and not the rest of the altcoin market, because it's clear as day versus the rest of the altcoin market. Collectively, Bitcoin topped in June in its dominance. And even if we include Ethereum and we just remove the stable coins, we see the resistance there as well. Whereas when you look over here at Bitcoin's dominance, you just don't get that picture, right? And I've tried to explain that a lot, the safety trade. I've made YouTube videos about it. I've written threads over here on Twitter about it back in August of last year. For those who weren't here in 2018 through 2020, Bitcoin was considered the safety trade. We didn't have a stable coin market. If you wanted to stay in the market and preserve capital, it went to Bitcoin. And I'm proposing that the safety trade is over. I make all of these arguments back on August 11th of 2023 to talk about the stablecoin market, to talk about how it's different, and that the Bitcoin dominance chart, or Bitcoin.D, is not accurately representing what is really happening out there in the market. While so many people point to it, the reality is it does not accurately represent what has been happening. And I think you get that just when you see these in here, just by having the stable coins removed and then realizing, wait a minute, the dominance of Bitcoin topped in June versus the entire cryptocurrency market collectively except Ethereum. So why is all the attention on Ethereum? Because the picture is entirely different for the rest of the market collectively. And when we even look at the Bitcoin dominance, when we remove the stable coins like USDT and USDC, we can head down here to MACD and we can see the last push of strength for the dominance happened when? In June. Since then, it's just been trending down in strength in here after hitting resistance levels. We can shift down here another time frame. We go down to 2 weeks. You can see the stochastic RSI just pointing straight down. You've got the cross. You've got negativity happening over here on the MACD. When we go down to the 1 week time frame, of course, we see the stochastic down at the lows, and we just see the divergence happening here of relative strength index just trending lower and lower in here, down, even though that's slightly up. We call that a bearish divergence. So the question is, will the Bitcoin dominance break down from here? Because that's what it means when the altcoins outperform. Again, looking over there at the dominance, when we exclude the stablecoins and when we exclude Ethereum, we see all the higher lows that get built all the way up in here as it just keeps going and going and going and going until finally, boom, we now start to have a lower low over here on the daily time frame and over here on the weekly time frame. That just hasn't happened here in the whole uptrend back to the resistance level here to get your first daily and weekly lower low. Then you say to yourself, well, what just happened with sentiment just now? What happened yesterday? What happened in the days prior? Were people piling into Bitcoin? Were people YOLOing into Bitcoin, selling their altcoins into Bitcoin? And well, not everybody did. It was more pronounced. I saw it in the chat. I saw it over there on Twitter, posting it. People that I follow, they're like, I just couldn't give into it. I couldn't handle it anymore. I had to give into it a little bit. I had to swap some of my XRP for Bitcoin. And that happens after the first lower low back into a retracement. That's the moment that the pain was too much. And we talk about that all the time, that when you go back into retracement levels, that's when people tend to YOLO into something. You go back into retracement levels, that's when people tend to YOLO into something. And so the point of all this discussion on Bitcoin dominance is there's so many people pointing that this thing has to go up higher. We have to get all the way up here, but it's not accounting for the fact that we've already gone much higher with USDT, and they keep pointing to Ethereum and just removing Ethereum from there. We've definitely already gotten there. Heck, exclude XRP from the mix. Where have you gotten all the way back to? Bingo. Bitcoin versus the entire altcoin market, excluding Ethereum and XRP, completely 702 retraced. Do you know how much it retraced in 2018 and 19? You better believe it. 702. And I even talked about this back in August when we account for USDT, USDC, Bitcoin, and Ethereum. It had already 702 retraced and the safety trade was done. August 11th, right here. August 11th. There was the evidence already there that the safety trade was done. The dominance narrative was over. And still, to this day, that has been the peak, which was a 702 retrace. And I know a lot of people won't want to admit it, that there was probably some YOLOing into Bitcoin, couldn't afford not to be in Bitcoin going through such an intense moment yesterday, that they likely grabbed Bitcoin in that retrace after the first lower low. So the question is, do we see divergences emerging in here in the dominance to say the trend could be reversing on the dominance at this point? And sure enough, we see a lot of weakness, right? This whole grind up in here, look how strong the stochastic is the whole time. Now it's just struggling to couldn't even get back up to 100 that time. It just went right back down to the lows. Look at the MACD in here. All of this happening with the MACD in here. Wait a minute, I thought Bitcoin was the showstopper. Looking over there at the monthly time frame, you just see it in here, right? Just pointing straight down here for the monthly stochastic RSI, and really just weakening and weakening and weakening here on the MACD, the lowest that we've seen since the earlier part of 2022. Even if we just look at Bitcoin dominance and not take into account any of that stablecoin stuff, Ethereum, XRP, and just look at Bitcoin dominance exclusively, even on these bigger time frames, like the 2 week time frame, look what is showing up right there for the first time since October of 2021. Right there. I guarantee there is somebody who YOLO'd their altcoins into Bitcoin this week and just said, oh no. And well, I don't know if you saw the market yesterday, Bitcoin's big day. I'm sure you saw it. The whole market was green and Bitcoin was red. Look at it today. You got green all over the place. Where's Bitcoin? Red. Look at Ethereum starting to go. Are we seeing the rotation beginning? And was that the end of the Bitcoin run? My suspicion is it was the end. Again, there's lots of distribution structures that can happen in here. There's things we've talked about with what the stock market looks like and whether Bitcoin is going to have something that does look more like that and that it ends up, that's for another day. But as for the actual run on this channel, I'm treating it as if that was the top. That was max euphoria yesterday. Now it's time for the show to spread elsewhere. And I think the market is telling us that it is, especially when we look at like stable coins and Ethereum versus the Bitcoin dominance. And even if we don't take any of those things into account, the market is telling us time is coming. And for that, I am 92% in the altcoin market. So that's the focus now, waiting to see big breaks happen there. It's an exciting time for sure. There's a lot of excitement in the market. Now this excitement needs to try to find some yield because I don't think they're getting it in Bitcoin. So we'll keep checking on it every day. And I look forward to what the coming weeks have ahead of us. But on that note, I'm going to go ahead and wrap this thing up. If you'd like more content from me, of course, you could check that out over here on bcbacker.com. There's over 40 videos here and over 11 hours of content deep diving into the historical behavior of the cryptocurrency market to give you a fundamental understanding of how this market has worked in the past, while also teaching you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. Try to explain things in very easy to understand ways like I do here on the YouTube channel. And there's also extra stuff in here like the historical behavior of the cryptocurrency market and a lot of other stuff like research that helped improve odds when we're talking about like developer data, why percentages matter way over prices, such as with Bitcoin. We saw it, 12% over the last month versus all the altcoins, the bigger percentages happening in there. We all focus on those big round numbers. I also talk about the importance of tokenomics and the market caps. That's why we show the market caps a lot on here. Also, really important, crowd behavior, which also goes along with emotional management. There's downloadable PDFs in here for a lot of this different stuff. If you'd like to have printouts of it, such as like with the Elliott Wave stuff, you'll be able to download these PDFs for yourself so you can print them out or save them to your hard drive. This is all available over here on bcbacker.com. It's $39. No subscriptions over here, one time, and it's yours. Again, right here at bcbacker.com. I do also write a newsletter over here on blockchainbacker.substack.com. The most recent one, of course, was the end of year for 2023 as we're looking into 2024, what we're seeing ahead. Sometimes we'll do case studies in here that we just went through a 4-part series about developer data, circulating supply, inflation, and percentage drawdowns with the 2021 bull run to see if there was better returns by focusing on those data points rather than just shopping in the top 20. Of course, we found elements that massively beat the top 20 by market cap. All of that is still available here for anybody who does subscribe or anybody who newly subscribes. And then, of course, we try to apply that to today's market to see what that would look like now with those same metrics. Links to the newsletter here at blockchainbacker.substack.com and to bcbacker.com are available in the description of this video and each of my videos and live streams that I do. Otherwise, I hope you have a wonderful day. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.